Good morning, everyone. So, hope everyone's doing all right and had a great week so far. Happy TGIF. Before I get started, remember hit that subscribe button and don't forget to hit the bell icon so you get notified when everyday briefing comes on and the US pre-US session as well from our head of trading Tim Duggan. So all eyes on the Fed. This pretty much speaks for itself. The So trade is dragging a lot of things down, and we saw this come through with the US growth readings for the last 3 months coming in uh, basically worse than expected at 1.5% versus 1.4%, and you would expect this to be negative for equities, and you would expect safe haven flows into the dollar, but no, that was not what happened, and this is the same conversation we had yesterday on why and this is because well, the markets tried to price in a hawkish Fed, saying, okay, once we get to neutral, imminent rate hikes are still, being put into consideration. So we are still awaiting any communication from the Fed, saying otherwise. So what the market is doing right now is pricing in the fact that they expect this to happen. They expect the Fed to come in and just pull the hawkishness just slightly, so that it doesn't completely eradicate the growth impulse that we've seen. And because like with China manufacturing numbers and services numbers coming in showing like this, we're seeing numbers that are worse than for the last 2 years. So this is why that the market is not completely uh, buying into the Fed being able to continue with rate hikes once we get to neutral. They're even considering, the Fed lowering the terminal rate. So that's one. Well, that's not. That's not one. So what happened was that I mentioned that I wanted to see this 102. This held on. The 102 level here held um, during APAC trade, and it broke down. And once this happened, it just shows pretty much, showing the market was showing its hand, saying, okay, we don't think this is where this should be, right? It's the dollar has been bid since the May meeting, and now they're saying, okay, we don't think the Fed can remain as hawkish as they are. So we saw a dip on the dollar, and at the same time we saw the E-mini S&P. Well, risk assets in general, the E-mini S&P tech had an enormous time. I mean, the Dow even better because retail and banks. Come up with numbers much better than tech. Nvidia got hit so hard yesterday, and although it recovered at the start of trade slightly. So what I mentioned yesterday was this 4,000 handle, wanting to see it being reclaimed and held. It didn't even stop there. It just broke through off the handle and just went straight for this 40. What's this level? Yeah, 38.81's level. So it's being supported over there right now. We can see buying just coming through during the APAC trade. Really positive stuff. So as long as Dixie can continue, I would think we would want to see it try to go for that 101 handle due to the fact that we saw this tiny bit of resistance. Well, it's not tiny to be honest. It's resistance that was broken through in when was this? 22nd of April. So a retest of this 101. If it doesn't go here, it breaks through this resistance trend line here and goes for the 102 spot fours, I would think that we could get a retest of the 4,000 today, and that would be, to me, an A grade setup. Uh, so crude still persists. The persistence in tight supply is still being priced in, and you have like a trifecta of amazing reasons for bulls to just pile onto this, despite fears of COVID zero policy from China, the war, a resolution of the war, which we're still not seeing that playing through, and an embargo on Russian energy, which is still they're just dilly-dallying with all those things. So all those things are matters that you need to keep an ear to the ground for, just in case there's any changes on that front. So what we saw here, like I mentioned, there's this consolidation of price we've seen, and to just see where crude wants to go. So we test one, two, three, and then yesterday just broke through, flew off the handle with a Dixie, with a dollar just weakening, and then risk appetite going back into the market in full gusto. Just look at that. Look at that. That is a massive move. Our head of trading, well, the guys in the room. I mean, we trade energy almost daily, so this was something we paid close attention to yesterday. So anyway, so on data today, we have personal income and PC readings out of the US at about half one GMT. Baker Hughes rig count for crude traders. You know, I doubt there's going to be an absolute change in this. So, anyways, have a good session ahead. Enjoy your weekend, and I will see you guys next week. Cheers.